students, in the previous session we have completed problem number 15. Now we'll start problem number 16. Now see carefully problem number 16. The following forecasts have been made for investments A and B. So we have two stocks, stock A, stock B. For stock A, returns are given 10%, 15, 20, 25, 30 and probabilities are 0.05, 0.2, 0.5, 0.2, 0.05. So we are given the probability and returns. So we have to calculate ex-ante return. Multiply the probability with the returns to get expected return. Then B also we are given the returns 2, 12, 20, 28, 38 and probabilities are 0.05, 0.25, 0.40, 0.25, 0.05. So for two companies we are given the probability and returns. Calculate the expected return and standard deviation. So we are required to calculate the expected return and standard deviation of stock A and stock B separately. Already this type of problems we have done so many in the previous problems. So I am giving you the answer for this problem. You copy down this answer. You try yourself. Just like the previous problem. 16th problem you can see here. Stock A, expected return 20%. Standard deviation under root 20. 4.472 you should get the answer. For stock B, expected return 20%, standard deviation 64.4 under root 8.025. So stock A and stock B, expected return and standard deviation, this is the answer for problem number 16. Copy down this answer. You have to try yourself. Now, problem number 17. See the problem number 17. The following joint probability distribution gives the returns expected for next year by Super Good Fund Limited and Invest Well Fund Limited. So two separate companies are there. We are given the joint probability distribution of the two companies. First company, Super Good Fund Limited. Second company, Invest Well Company Limited. State of economy, very good, above normal, normal, not so good, very bad. So events are given. We are not concerned with the event, just write down the same as it is. Then probabilities are 0.1, 0.2, 0.4, 0.2, 0.1. Joint probability. Joint probability means this probability will apply to both the companies. Same probability will apply to both the companies. Returns of Super Good Fund Limited and returns of Invest Well Fund Limited. So we are given the returns. You are required to find out the covariance and correlation of return between the two firms. Again, this type of problems also two problems we have done where we have calculated covariance and correlation. So for calculating covariance, first of all we require the expected return and standard deviation. तो पहले हमको चाहिए expected return और standard deviation. ये मालूम करने के बाद ही we can be able to find out the covariance and correlation, right? So first we are going to take up the first company calculation of, this is the 17th problem. Calculation of covariance and correlation, Super Good Fund Limited. Super Good Fund Limited, first we are calculating state of economy VG, very good, AN, above normal, N, normal, NSG, not so good, VB, very bad. So I have taken the state of economy. Returns are given for Super Good Fund, 17, minus 2, 13, 12, 15. Returns are given. Probabilities are given in the problem, 0.1, 0.2, 0.4, 0.2, 0.1. Multiply the return with probability to get expected return. Add up the expected return, the total you will get 10.4. So ER, expected return, 10.4. So DX is equal to R minus ER. R we are having here, 17, minus 2, 13. Or ER abhi malum kar liya, 10.4. So 17 minus 10.4, you will get 6.6. Minus 2 minus 10.4, you will get minus 12.4. 13 minus 10.4, 2.6. 12 minus 10.4, 1.6. 15 minus 10.4, 4.6. So we have calculated dx. अब dx को square कर देंगे. तो 6.6 को square कर दिए. 6.6 into 6.6. You will get 43.56. Minus को square कर दिए तो plus हो जाएगा. Minus into minus will become plus. तो 12.4 को square कर देंगे तो 153.76. 2.6 square, 1.6 square, 4.6. Square करने के बाद multiply probability with dx square. Probability we are having here and dx is square here. तो 0.1 into 43.56, 4.356. Then 0.2 into 153.76, 30.53. Like that PDX. आ गया PDX square. Now expected return of this super good fund limited is 10.4%, and standard deviation is, the formula is summation PDX square under root. Summation PDX square under root. This formula we have applied. I have not written the formula, directly I have taken the value. So 40.44, this is the summation of PDX square. और ये 40.44 को अंडर रूट कर देंगे तो स्टैंडर्ड डिविएशन 6.359 is the standard deviation. We have calculated for super good fund. Exactly same way you have to calculate for invest well fund limited. State of economy same आ गया, returns problem में दे दिया है, probability given in the problem, multiply expected return dy square PD by square. Then expected return is 12.8%. Expected return of the second company, Invest Well Fund Limited, 12.8. Standard deviation is under root PDY square. PDY square is 48.76. So 48.76 to root में डाल दो 6.983. So far we have calculated expected return and standard deviation of both the companies. Now we calculate the covariance. Covariance मालूम करने के लिए state of economy. Then we take the dx, dy and probability. ये तीनों को मल्टीप्लाई करें तो कोवेरियंस आता. What are the three things? dx, dy and probability. dx are the deviations of first company. Here are the dx values: 6.6 minus 12.4, 2.6, 1.6, 4.6. Same I have put. Then dy 10.2 minus 11.8, 10.2 minus 11.8 minus 0.8. Probabilities are given 0.1, 0.2, 0.4. ये तीनों को मल्टीप्लाई करेंगे 6.6 into 10.2 into 0.1, you'll get 6.732. Multiply, minus into minus will become plus. So 12.4 into 11.8 into 0.2, 29.264. Here you can see plus into minus minus, minus into plus minus. यहां पर minus into minus कर दिया तो plus हो गया, लेकिन यहां पर एक ही minus है, तो plus into minus will be minus, minus into plus will be minus. So ultimately you will get minus here. 2.6 into 0.8 into 0.4, you will get this one. Then multiply this 3, multiply this 3, the total is 40.8. So covariance is nothing but summation of P dx dy. P into dx into dy. ये तीनों को multiply करके total जो आया 40.8, this is the covariance. Now correlation का formula R is equal to covariance divided by standard deviation of x into standard deviation of y. तो covariance अभी आ गया 40.8. Standard deviation of x in a first company 6.359 और standard deviation of second company 6.983. दोनों को multiply करेंगे denominator में, then ultimately you will get R is equal to 0.907. तो correlation coefficient is 0.907. You should take a pause of this screen and copy down the complete solution. There is no new point in this problem. Already we have done this. So we have completed 17th problem. Now see the 18th one. Calculate the standard deviation of the returns on stock A and B, which is riskier. So whichever stock has higher standard deviation, that stock is a riskier. तो दोनों स्टॉक का स्टैंडर्ड डिविएशन मालूम करेंगे. जो भी स्टॉक का स्टैंडर्ड डिविएशन ज्यादा है वो रिस्कियर. हायर द स्टैंडर्ड डिविएशन, मोर इज द रिस्क. Return on stock A 4, 8, 12, 15, 18. Then probabilities are given. Return on stock B 5, 11, 14, 16, 20 probability. So again, to calculate standard deviation, same method we have to apply. Here returns are given, probabilities अभी जैसा मालूम करे थे exactly same. So you can do this problem for your practice. I'll give the answer. 18th problem. Stock A. Expected return is equal to 18th problem. Stock A, it is expected return 12% and standard deviation is 25.02 under root. You will get 5%. Then stock B, expected return is 14.4% and standard deviation is 14.44 under root, 3.8%. So this will be the answer. Now it is after making these calculations, you have to decide which stock is more riskier. So one conclusion you have to give by comparing this standard deviation. The standard deviation of stock A is 5%, whereas the standard deviation of stock B is 3.8%. So which company is having a higher standard deviation? A company, A stock. A stock में 5% है, B stock में 3.8%. तो जहां पर भी स्टैंडर्ड डिविएशन ज्यादा रहेगा वो स्टॉक रिस्कियर है. तो कंक्लूजन, स्टॉक ए इज मोर रिस्कियर सिंस इट्स स्टैंडर्ड डिविएशन इज मोर, सिंस इट्स स्टैंडर्ड डिविएशन इज हाई, 5%. दैट्स इट. सो यू कैन डू द सेम वे. प्रीवियस प्रॉब्लम में जैसा टेबल बनाए थे, एक्सपेक्टेड रिटर्न, dx वैल्यू, dx स्क्वायर, देन pdx स्क्वायर, सेम थिंग यू हैव टू डू. So you can do this 18th problem, copy down the answer, you should get this answer. Now 19th problem. From the following data, calculate expected return and risk. Whenever it is asking risk, it means you have to calculate standard deviation. Associated with securities A and B, also mention which security is riskier. Which security is more risky? That we have to find out. So probabilities are given, chance are given, same. So exact chance, we are not concerned with chance, that is only an event. So keep it aside, that write down chance 1, 2, 3, leave it. We should not consider. Then return A, 26%, 22%, 12%, and probabilities are 0.25, 0.5, 0.25. Then second time पे return B. तो अलग अलग कैलकुलेट करेंगे. पहले रिटर्न ए का मालूम करेंगे, बाद में रिटर्न बी का. स्टॉक ए, स्टॉक बी सेपरेटली वी कैलकुलेट. दो अलग अलग बॉक्सेस बनाएंगे. फर्स्ट बॉक्स स्टॉक ए का, सेकंड बॉक्स स्टॉक बी का. देन आई गिव द आंसर फॉर दिस प्रॉब्लम. 19th, stock A, expected return, standard deviation. Stock A expected return is 20.5% and standard deviation is 26.75 under root. It comes to 5.172%. Similarly, stock B, expected return 21.5%. Standard deviation 14.75 under root. It comes to 3.841. That's it. Exactly same way. Previous problem में जैसा standard deviation और expected return मालूम करें, यहाँ पर भी पहले अलग बॉक्स बनाएंगे, stock A, then stock B. Exactly same. तो ER 20.5, expected return, standard deviation 5.172. Stock B expected at 21.5, standard deviation 3.84. Again, conclusion. It is asking you which stock is more riskier. By comparing the standard deviation, we can say stock A is more riskier because the standard deviation of stock A is 5.172, which is higher than 3.841. That's it. Copy down the answer and try yourself, make your own calculations exactly similar. Now last 20th problem, problem number 20. See the problem. Calculate the covariance and coefficient of correlation from the following data. So we have to find out covariance correlation from the following data. Stocks are X and Y and their returns are. Stock X return 14%, stock Y return 26%, stock X 22%, stock Y 10%. So we are not given the probability. When probability is not given, it is X post return. It is X post return. So we cannot calculate expected return. We can calculate average return. Expected return तब मालूम करते हैं जब फ्यूचर रिटर्न्स अगर दे दिया, प्रोबेबिलिटी दिया तो एक्सपेक्टेड रिटर्न. अगर प्रोबेबिलिटी नहीं दिया तो फ्यूचर रिटर्न नहीं है, वो पास्ट रिटर्न है. तो वो टाइम पर हम कैलकुलेट करेंगे एवरेज. विल कैलकुलेट एवरेज रिटर्न. नाउ 20th problem. Calculation of covariance and correlation. Calculation of covariance and correlation. This is stock X, this is stock Y. Now we take three columns, 3 sub columns. That is return will take, then we'll take dx, that is equal to r minus r bar, then dx square. Here also we take the return, dy is equal to r minus r bar and dy square, dx into dy. Two returns are given. X के 2 returns है. The 2 returns of X are 14% and one more return is 22%. And Y, the Y returns are 26% and second one is 10%. That's it. This is the information given. This is the complete information given in the problem. 2 returns are given for X security, 2 returns are given for Y security. We are not given any probability. So the total of this summation R is equal to 36. Here also summation R is equal to 36. So average return R bar is equal to summation R by N, that is equal to 36 by 2, 18. So R minus 18. Here also R minus 18. Both the companies are having the same summation R. Summation R 36, 36. So 2 values are there. So 36 divided by 2 you will get 18. So 18% is the average return for both the companies. Now we subtract. 14 minus 18 is minus 4. 22 minus 18 is plus 4. Now square it. 4 4s are 16. 4 4s are 16. So summation dx square is equal to 32. 32. Here 26 minus 18 is 8. And 10 minus 18 is minus 8. 8 8s are 64. 8 8s are 64. Summation dy square is equal to 128. Now we'll calculate the dx into dy. Dx is minus 4, dy is 8. So 8 4s are 32. You'll get minus 32. Here also 4 into minus 8, minus 32. So minus 32 दोनों को add कर दिए तो it will be minus 64. Don't say minus minus will get cancelled. No. Minus 32, minus 32. If you add up both, you will get minus 64. This is the dx dy. Now we will calculate standard deviation of stock X. that is standard deviation. Sigma x is equal to summation dx square by n under root. How much is dx square? 32. 32 divided by 2 under root. That is equal to 16 under root 4. 4 is the standard deviation of stock x. Standard deviation of stock y, sigma y, is equal to summation dy square by n under root. Then 128 by 2 under root. So 64 under root is equal to 8. Then covariance. Covariance is equal to summation dx dy by 2. Summation dx dy is minus 64 divided by 2, minus 32. The formula for covariance will change for ex post and ex ante. Previous two problems we have done ex ante. So formula was summation p into dx into dy. But here dx dy by n. Summation dx dy divided by n. So 64 divided by 2, 32, minus 32. So covariance we got. Now we have to find out correlation. Correlation coefficient. R is equal to covariance between A and B divided by standard deviation of A into standard deviation of B. R is equal to covariance we got minus 32. Standard deviation of A is 4. Standard deviation of B is 8. R is equal to minus 32 divided by 8 4s are 32. R is equal to minus 1. Correlation coefficient is minus 1. Covariance of A and B divided by standard deviation of A into standard deviation of B. 4 into 8, 32. That's it. So these are the problems in unit number 1. So to conclude, we'll brush up what we have studied in this unit number 1. In unit number 1, we are having the introduction to investment. So what is investment? What are the different types of investment? What is investment process? And what is the difference between investment and speculation? Then we have discussed what are the factors to be considered while making investment decision. The factors to be considered are return, risk, liquidity, marketability, safety, then taxation, then last one inflation. These are different factors which must be considered while making an investment decision. Then speculation versus investment. Most frequently they will ask an examination. Differences between speculation and investment. Next we have discussed about what are the sources of getting the information. Information kahan se milega. So information we will get from different sources that we have discussed. Then we have discussed about the return. What do you mean by return and what are the different types of return? Then we have discussed about risk, the meaning, the concept of risk and what are the types of risk. Systematic risk, unsystematic risk, market risk, business risk, interest rate risk. These are the things we have discussed. And then we have discussed about the approaches to investment analysis. The approaches to investment analysis are fundamental analysis and technical analysis. Fundamental analysis is concerned with finding out the price of the share according to the data of the company. कंपनी के जो डाटा है, कंपनी की प्रॉफिटेबिलिटी है, डिविडेंड है, ग्रोथ रेट है, अर्निंग है, ये सारी चीजों को कंसिडर करके जब वैल्यू मालूम करते हैं तो उसको कहते हैं फंडामेंटल वैल्यू और इंट्रिंसिक वैल्यू. Then secondly, technical analysis. In technical analysis, the market price of share will be determined by the market demand and supply forces, not by the performance of the company. कंपनी के परफॉर्मेंस के ऊपर डिपेंड कम रहता, मार्केट फोर्सेस से ज्यादा रहता अकॉर्डिंग टू टेक्निकल एनालिसिस. द टेक्निकल एनालिस्ट आर कॉल्ड चार्टिस्ट्स बिकॉज दे डिपेंड्स ऑन चार्ट्स. दे विल प्रेडिक्ट द मार्केट प्राइस ऑफ शेयर अकॉर्डिंग टू द पास्ट मूवमेंट्स, पास्ट मूवमेंट ऑफ शेयर प्राइसेस. वो कंसिडर करके हम करंट प्राइस मालूम करते हैं. अकॉर्डिंग टू टेक्निकल एनालिसिस, द मार्केट प्राइस हैज 80% साइकोलॉजिकल एंड ओनली 20% लॉजिकल. Whereas according to fundamental analysis, it is 80% logical and only 20% psychological. So these two are the approaches for investment analysis. Next, lastly, we have done the theoretical aspect called efficient market hypothesis, EMH. Or EMH में forms of EMH according to pharma decomposition. Three forms of EMH are there. The first form is weakly efficient hypothesis. Second, semi-strong form of EMH. Third, strong form of EMH. ये three का discuss हम कर चुके हैं. So these are the complete theoretical part of unit number 1. Practical part, we are required to calculate the return and risk. For both the type of returns, the returns are ex-post return and ex-ante return. So we have done the problems on calculating ex-post and ex-ante. And also we have done the problems on calculation of variance, covariance as well as correlation coefficient. So if you study this, whatever we have discussed, I'll provide the material in the link in the description. I'll give you the complete theory of this unit number 1 and also this problem set. So my request is everybody must take a printout of this theory as well as problems beforehand. When you listen the lecture, you must have beforehand. Then only you can be able to get the full grasp on the subject, on the concept. So this marks the end of unit number 1. Inshallah, next session we will start unit number 2.